Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock to determine where the stock price could potentially go after their Q2 earnings report, which will be released on August 2nd. So we're going to be going over the latest news updates, price targets, and price predictions for this particular stock. We're also going to be analyzing 3 articles today, one of which says that the Sofi stock won't underperform the market and will either have returns equal to the market or even potentially exceed the returns of the market. In our next article, we're going to be going over why a financial reporter actually thinks that the Sofi stock price will surge and make a massive move after their Q2 earnings report on August 2nd. And then finally, we're going to be going over a more bearish negative article, but it starts off very positive about why Sofi Technologies is actually outpacing the overall stock market over the last month, and how potentially that momentum will pull back once again before reinvigorating itself further on. So we're going to be analyzing all 3 of those articles and going over the latest stock news updates, as well as discussing the latest price targets and price predictions among experts. So for more videos like this one, remember to go and smash that like button right now. Comment your thoughts down below about where you think the SOFI stock price is headed after their Q2 earnings report. Subscribe if you are new, and without further ado, let's just jump right into today's stories. If you didn't know, Sofi Technologies is a fintech company or a financial technology company that operates as a digital bank. They give their customers an all-in-one inclusive digital app where they have access to a plethora of various financial services and or financial products. Currently, the Sofi stock price is set to be worth between $7 and $11 according to stock experts and even retail investors, which means that the current stock price that the Sofi stock is trading at right now could potentially be undervalued, because right now the SOFI stock price is trading for $6.43. The company right now has a market capitalization of $6.1 billion, which is actually not too bad. And this allows for the company to eventually grow into its valuation, which makes it a phenomenal growth company in my opinion. We have a 1-year price target for the company of $9, which would equate to an upside potential of 39.75% from the current stock price to $9. We also have a neutral rating from TipRanks of 6 out of 10, which means that this company could potentially outperform the market or at least meet market expectations. According to various analysts and financial advisors, the company is a moderate buy rating right now, and the overall market sentiment surrounding the stock is very bullish and positive. But I do want to say that in the short term, the stock price could continue to fall or even try to find a bottom. But overall, the overall news sentiment is relatively positive, so that is something to really look forward to, and hopefully the company can keep that momentum. The company also has a beta of 1.39, and a beta measures the volatility or the rate at which the stock price increases and then decreases. The faster the price increases and decreases rapidly or is more volatile going up and down, that increases the beta, which measures the volatility of the stock price. For instance, a beta of 1 would be the S&P 500, which is a great benchmark for the overall stock market. So although this company is more volatile, that's exactly what we would expect from a company that is a relatively newer company on the stock market and is a growth company. It's clearly not going to be as stable as many other companies or even a stock market benchmark such as the S&P 500. Currently, around 11 to 12 analysts cover the Sofi stock price, and overall, analysts are very bullish and expect big things from this company in the future. But now let's go and jump into our first article that we're going to analyze, which says that despite the recent drop in the SOFI stock price, the Sofi stock isn't set to underperform the market and either deliver results equal to the market or potentially exceed the overall market. The article also rightfully points out that right now could be a good buying opportunity for Sofi Technologies because the stock price has decreased and fallen around 73% from its 52-week highs. So when the stock price has fallen this much, this could indicate a good time to buy the company because it's substantially cheaper than it was. Like we talked about earlier, TipRanks has a smart score for this company, which currently ranks 6 out of 10, which is a neutral rating, which means that the company is unlikely to underperform the general market, which means that it could either track with the general market and deliver similar returns or potentially exceed. But in an ideal scenario, we would want that SMART score to be even higher than 6. We also need to keep in mind that despite the SMART score and what analysts say, we need to take all of these price targets and price predictions with a giant grain of salt, because no one can actually predict the future stock price appreciation of any single stock. Now, I do want to mention that this SMART score does incorporate around 8 major parameters for valuing a company, which would include analysts' recommendations, their price targets, their price predictions, technical analysis signals for the stock, insider buying, and what smart money thinks of this overall company. And I would say those are absolutely fantastic things to measure, and despite all of these measurements, overall, the momentum behind the stock is building, which is very good news. Stock experts right now are very cautious, but they are rather optimistic on the future long-term outlook for this particular company. However, in the short term, in the next 1 to 3 years, the company could experience major volatility due to the macroeconomic environment. We see many investors liquidating their growth stocks and their technology stocks, and we also see a rising interest rate environment. So this is not an ideal macroeconomic environment for this company to really explode. But if they can survive the next couple of years in this current market, the long-term opportunity and the stock price appreciation for this company does look phenomenal. The bottom line that this particular article is trying to communicate to investors is that Sofi Technologies continues to benefit their overall investors by having solid fundamentals with very strong member and product growth. And despite an economic slowdown or even threats of a recession on the horizon, this company still has very good long-term upside, even though the near term could be extremely volatile for the company, which could potentially bring the Sofi stock price to around $4 per share before the reverse stock split, if management decides to actually implement that reverse stock split over the next couple of months. But the Tip Ranks article reassures investors that the company could definitely outperform or actually perform in line with the broader stock market, which means that this is a pretty good investment to at least put on a watch list right now. Now, the next article is even more bullish and positive because they expect the Sofi stock price to have a massive move and surge very drastically after their Q2 report. Now, for me personally, I am not overly bullish on their Q2 report. I am actually thinking that they're just going to be in line with current metrics and projections, and I don't think it's going to be a huge beat in their earnings per share or their overall revenues. However, this particular author, as well as myself, have been very bullish on the overall Sofi stock price, especially after it dropped below $8 per share. And if you like the company below $8 per share, you really like the company when it bottomed out around $5 per share. Like we mentioned, this financial reporter expects that the Q2 earnings report for Sofi Technologies on August 2nd is going to create a massive upside move for Sofi Technologies. So why does he think that? Well, the first reason why he thinks that is he thinks that the fundamentals of the company are continuously building, and if they can keep their current growth rate, that is really going to show investors that this is a very stable and resilient company. Now, he does mention some bad news, and I did a video on this, and that is basically that Sofi Technologies may from time to time offer and or sell up to $1 billion worth of common stock, preferred stock, debt securities, and warrants, or any combination together or separately, which could potentially cause dilution to shareholders and a more negative earnings per share. However, that is yet to be seen. On a more positive note, the author highlights that there has been a ton of insider buying in Q2, and when insiders buy a company, they normally only buy for one reason, and that reason is that the current stock price is so low that insiders who run the company, such as the CEO, chief financial officer, and or any board of directors, they think that the future stock price is going to be substantially higher than the current stock price, which would invigorate them to buy more stock right now, and that's exactly what we have been seeing, which is very positive news. I want to reiterate that the Q1 results were actually very good, where their top line growth accelerated and the company saw their adjusted net revenue increase to $322 million, which represents a 49% increase year over year. However, despite these very positive results, we didn't really see a huge increase in the stock price because of this, which is why I don't really understand why the author thinks that after they release Q2 results that somehow the company is going to surge in their stock price. Because again, I am definitely not as bullish as this particular author regarding the Q2 results, because even if they are good, I don't think it's going to cause the Sofi stock price to surge as dramatically as this guy thinks it is. But let's see what evidence he presents arguments to support his thesis of this actually happening. He says that even if loans are hampered by the rising interest rates, the company is still growing very rapidly, just at a lower rate. And this also means that as the company continues to scale higher in their earnings as well as their revenues, it puts them closer to breaking even. And again, if you didn't know, this company is not profitable right now, but they are projected to become profitable at the end of 2024. And we will be talking about their revenues and earnings per share that they are set to bring in quarter two, literally in the next article. But first, I want to go over this very bullish article, which means that this financial reporter is very positive pertaining to the short term of this company. The author also anticipates that their technology platform growth will continue well into quarter two, and I actually agree with him here. I do think that will happen because in quarter one, they brought in revenue for their technology platform around $61 million, which would represent a 32% increase, and he actually anticipates a higher growth rate for quarter two year over year due to the synergies between their Galileo platform as well as their Technisys platform, which will fuel further revenue growth. And I actually agree with him here because in quarter one we saw around a 58% increase in the year over year accounts for their Galileo platform, and in quarter two there has been reports that we could see over 120 million accounts, and that would be a substantial increase, which I am looking forward to. However, Sofi Technologies' loan business is the thing that I am really focusing on because that's what brings them the majority of their revenue. Lastly, he identifies their last segment, which is their financial services segment, which brought in around $23.5 million worth of revenue in quarter one, which would represent a 7% sequential growth rate, which is really not that bad, but nothing really too positive or to go super bullish on. So why does this author think that the stock price will move very sharply in a positive direction after the quarter two results? Well, he actually thinks this is due to the short interest, and listen to what he says. He says that the short interest right now is quite high at around 18%. And if Sofi Technologies releases better than anticipated results for their quarter two earnings report and guidance, we could see potentially a short squeeze where shorts are trying to recover after the company rallies, which would send the Sofi stock price even higher, which could be between $8 to $12. And although that doesn't sound like a lot, if the company surged from around $6 to $12, you've literally doubled your money in an extraordinarily short amount of time. So despite this selling pressure, this could actually work in Sofi Technologies' favor. However, if they do not surge, this could be very negative for the company, pushing the stock price back to around $5 per share. The author of the article rightfully reminds investors that the company is still trading at a premium, which means it's overpriced and overvalued right now, which is not shocking. The majority of growth companies are overvalued because the whole point of growth companies is you're willing to pay a premium for an overvalued stock now for the future stock price appreciation of that company due to their growth rate. So even though this stock and company is technically expensive relative to other legacy banks, the high revenue generation and earnings per share and their overall momentum should be a long-term play according to this financial reporter. Lastly, we're going to go over the exact revenues and earnings per share that Sofi Technologies is set to deliver in their quarter two report. Now, this is where it gets dicey because a lot of financial reporters and projections don't actually agree with each other, because these projections are going to be what makes or breaks this company, which will determine where the stock price is headed after the earnings report. For the earnings per share, we have current metrics that say that Sofi Technologies is going to bring in a loss of 12 cents per share, and they also think that the revenue that will be brought in is going to be $345.99 million, which would equate to a 49.6% year-over-year growth rate if we compare quarter two of 2022 with quarter two of 2021. And honestly, if Sofi Technologies meets those expectations, which I think they will, that is going to be a win in my book. However, I don't think they are radically going to beat these estimates to where the stock price is going to surge. Even if they do beat these particular projections and forecasts, that doesn't necessarily guarantee that the stock price is going to surge like the previous article says. So I really want to bring us back to earth here because that last article was very, very bullish and positive. And although I do agree we should still be smart and weigh the pros and cons and we shouldn't forget about the bears that are in this company, particularly the very large amount of shorting that is going on for SoFi Technologies. We also have a full year projections for this company according to Zacks Rank, which according to current forecasts say that the company is going to experience a loss of 45 cents per share and total revenues of $1.5 billion, which would equate to around an increase of 55% year over year if we compare this year to the prior year, and a 52.74% respectively for these metrics. And that is absolutely phenomenal because, like we've talked about before, if you can identify a rapidly growing growth stock and you're willing to buy now and hold for the next 5 to 10 years, and their CAGR or compounding annual growth rate for their revenues exceed 30% consistently, this is a rapidly growing company that I think could definitely pay off over the long term. But I would love to hear your thoughts down below about what you think of Zacks Rank on this particular company, because as of right now, Zacks Rank actually says that the company is a selling opportunity right now, which would be in direct contradiction to Tip Ranks, which say that the company is a neutral rating, giving it a 6 out of 10. However, overall stock experts and many investors think that the company has very positive momentum and the ability to surge up to $9 per share, with $11 being the high end and $7 being the low end. But I would love to hear your thoughts down below. Remember to smash that like button for more videos just like this one, subscribe if you are new, and I'll see you in the next YT video.